All right, here we go. Wow, lots of news over the weekend. First of all, last week it was kind of a diddle week because everybody was waiting for news from China. Is there a deal on the table? And then over the weekend, the news broke this morning. Markets are jumping. The Dow is up more than 1,000 points, and we'll talk to you about why this is happening. Then also news from the pharma industry. Pharma stocks plummeted overnight because the new executive order is in the works. And what else is going on this week? Well, a lot. And that's what we're going to talk about in this show. By the way, if you're wondering why the sunglasses, well, over the weekend, I developed a severe allergic reaction to something. Still don't know what it is. So, yes, I'm pumped full of steroids, swollen eyes, but I wanted to be here with you. Anyhow, with that said, welcome to Coffee with Markus and Mark. And today is Monday, May 12th. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. Well, Mark, other than my super cool Rockwell shades, what's happening here?
Well, Marcus, I almost grabbed a pair of shades myself, thinking we were 106 miles to Chicago with a tank full of gas, half a pack of cigarettes. It's dark, and we're wearing sunglasses. For those of you who don't know, that's Blues Brothers
Blues
reference.
Brothers forever, yes.
Yeah. But yeah, I mean the markets aren't taking any heat right now. They're enjoying this spotlight here, and what a jump today!
Absolutely. I mean, this is where we have to actually look at a 5 minute chart of the E-mini S&P, and when we see what's happened here, we see that yesterday, when the markets opened, we already saw a huge jump, and then moving higher, and then another massive jump during the European session. So, what happened? Well, last week we had a little week. I mean, we talked about it last week, right? That there was really not a whole lot going on, and everybody was asking, where are the trade deals? So, this is why last week just moving sideways. In fact, we finished last week lower. And if you look on Friday, we see that on Friday, we actually were moving lower because markets didn't have much, or investors and traders didn't have much hope for the weekend, because this weekend, the US and China met in Switzerland. And before the weekend, everybody said, well, don't expect too much. This is just an initial meeting, and all we try to do is de escalate the situation a little bit. But then the news broke. It's not only a de escalation meeting. I mean, let's talk about this.
Yeah, this is huge. I mean, for the obvious reason, but also the expectations were really tamped down going into this meeting. So you were kind of thinking, we're not going to get much, but basically, we're looking at China and the U.S. agreeing on a tariff truce, at least for 90 days, where the US will lower tariffs on Chinese goods from 145% after things escalated back down to 30%, and China will reduce things from 125% to 10%.
Right. So massive. I mean, this is where it's not. Well, it is a deal. A deal is a deal, right? I mean, they say still details are being ironed out, but this is kind of effective immediately for the next 90 days. And this shows, first of all, that the differences between the US and China don't seem to be as big as everybody thought. It seems that since they pretty quickly agreed on this deal here, that all right, maybe both countries are very interested in putting the difference aside, working out a deal. And the other good news here is we saw that earlier we had a 20-point spread, right? 145% to 125%. So the spread is still there, meaning that the spread, the 20% higher that the US has here in terms of imports from China, didn't really bother China as much as the super high tariffs. And we know this is what actually everybody was afraid of, because this could drive the world into a crisis. I mean, supply chain issues again, everything is getting more expensive, but yeah, there's the deal, and markets are happy.
Yeah, you could say that. The S&P up 2.7% today, the Dow up 2.5%, the Nasdaq 3.5%. Started the day stronger, up near 4%, but still you can't complain with a 3.5% gain.
Yeah, and if you look at the heat map, we see that happy, happy, happy almost everywhere. So let's talk about what's not happy: utilities. So what's happening? Why are utilities not happy, Mark? If everything here, Amazon up 7%, Google up 3%, Meta almost 7%, Apple 5%, Nvidia almost 4%, Broadcom, AVGO 4.3%. Yet utilities and also consumer defensive down this morning.
Yeah, and I mean, this really is no surprise. So, when you have more of a risk on environment where investors believe that uh, investments could be a little risky, there's a tendency to focus more on consumer defensive. If you're worried about the economy, which companies are going to hold up, which companies are going to do well, but then you also have some decent dividends getting paid. And so, when you're investing and making part of your portfolio exposed to consumer defensive or even utilities is to get those dividend payments and to be invested in some companies that might not have that same type of volatility. You typically don't get these huge rallies, but you get something a little more stable that pays a dividend. Now, when you have a risk on environment where people are putting money into other investments, the whole idea here is that these other investments should outperform your traditional consumer defensives and utilities. So it's kind of a shift here from the concerns that we had with a significant trade war potentially with China and what we saw in the overall markets with that drop after what did President Trump called it in April? What day was it?
Uh, Liberation Day. I wanted to say
Liberation
retaliation
Day.
day, but it was
Liberation
Liberation
Day.
Day,
Yeah.
not retaliation. Okay.
So you kind of had that focus more on consumer defensive and utilities, and now it's just a perfect example of getting that shift back to more of a risk on environment.
Yeah, so that's just a shift money flow that's normal in the markets. The only thing that's kind of not normal is here healthcare plans. This morning, we see that this is another sector. If you just zoom in here a little bit on the healthcare sector, we see that CVS is down, CL is down, United unchanged. It looked much worse this morning because President Trump is about to sign an executive order basically limiting drug prices.
Yeah, this shift actually pretty interesting because early on, President Trump, like you said, signing or announcing an executive order to reduce prescription drug prices. Eli Lilly was down, Merck was down, Pfizer was down, but there has been a bit of a reversal. Marcus, I started to look into this a little bit, and it sounds like analysts were expecting a change back to what he was considering or implemented during his first administration, and maybe it's not quite as bad, and so that's why there's been a bit of a reversal. But I didn't get an opportunity to fully investigate that.
Yeah, I mean, long story short, as that not as worth, and this is where sometimes sell the rumor, buy the facts, buy the rumor, sell the facts, right? And this where now there was this looming announcement and thread about tariffs on pharma industries or here drug price regulation, and now that the news is out, it's kind of like okay, now we know what it is, and not as bad as expected. Anyhow, in other news, Mark, there's a shakeup. Look at this in the most valuable companies in the US. And it used to be Apple, followed by Nvidia, Microsoft taking the number one spot right now. What do you think about that?
Wow, that's a big move. And another thing I saw, Broadcom back above the 1 trillion mark with this big 5% gain. So tech definitely a winner today. You see those. I mean, Apple's up 5, almost 6%. Microsoft just look out. Apple's
Apple's
closing
coming.
in, but interesting. Yep.
Yeah, but I mean, that's interesting. I've looked at it, or we haven't looked at it in a while. Wow. Can't can take the eye and the eye of the prize here for a little bit. All right. VIX, the volatility index, crashing. Look at this, below 20 again right now. After we had the April 4th volatility spike where we went up to 60 and now all the way down back to below 20.
Yeah, and historically speaking, above 20 is still high, but definitely seeing a volatility collapse, which again, the VIX here is based on S&P 500 options premiums, and when you have more expected movement and more risk in the market, so typically when prices are coming down, the VIX is spiking. No surprise here on a huge update. There's less fear in the market, which represents lower option premium because everything's just moving up.
Yeah. All right, now let's take a look at what's happening this week. And I mean, right now, everything overshadowed by tariffs talks here. But we have a few big announcements coming this week. Economic reports. We have CPI and core CPI data on Tuesday. So inflation data on Thursday, then followed by PPI, core PPI, and also retail sales data coming out. And I mean, Mark, we talked about it this morning. Last month, we had the surprise move, negative inflation, now expected to be at 0.3%. And I believe this is kind of on the high side. I believe that CPI might come in even lower than that.
Could. And this is where without the China trade deal, I think that this would be a much bigger report. I mean, inflation data is always going to be important, especially when you have a higher inflationary environment and you're looking at the Fed wondering if they can cut rates. There's 2 cuts expected this year. But I really think all of this right now is going to be overshadowed by the China trade pause here in that drop back. So will we get a little volatility with CPI and PPI possibly? But Marcus, I don't think there's unless there's a huge shock. I don't think it's going to
And
matter
honestly,
much.
it wouldn't matter because then everybody will say, oh, yeah, this is because of tariffs. And tariffs just went down by 115%, or what was it, 125? I mean, just a lot. So, kind of,
Exactly.
even if we see inflation coming down and we see a small uptick right now, everybody will say, oh, we know why that happened. This is because of
You could
tariffs.
explain it. Yep.
Yeah. So that's easy enough. All right. Hopping over to the earnings calendar. A few earnings this week. We are at the tail end of earnings season. We have Cisco reporting on Wednesday after the bell. We have Walmart on Thursday and Deere before the bell. Applied Material and Take Two Interactive after the bell on Thursday. But we see it's already calming down here.
Sure. So Walmart, the biggest of the bunch, but uh, calming down after getting through most of earnings
Yeah.
season.
All right, now let's take a look at our positions and see what is happening. So on Friday, we finally had a position, or we finally had a signal. AEP was the signal here on Friday. We entered at 104.43 right now, since this is AEP is a utility, right? So we just talked about it, utilities. Slightly down here today. So this were AEP down 2% today. Nothing to do with this here right now.
Yeah. So we know why it's down. It was a valid signal, and we'll see what happens over the next couple of days.
Yeah, right now at 102.66, our stop loss at 96.55. So still well above our stop loss. And let's see, as said, what happens here this week. All right. Hopping over to our wheel trades. So lots of movement there. First up, let's take a look at CSIQ. CSIQ this morning up 8% on the good news that tariffs are reduced. So back above $10. I like that.
Yeah, let's keep going. Take out those highs that we saw a couple weeks ago.
Yeah. Halliburton HAL this morning started strong, pulled back a little bit, still up 4.4% for the day. And Halliburton, this is where I tried to fly a rescue mission last week, sold the 20 put that expired worthless. Today, with this move higher, not selling a put yet, but still interested, flying a rescue mission, our break even here at 27.19. So I'm okay either way. If you're pulling back a little bit, I will try to sell the 20 put again. If we are moving higher, hey, maybe soon we will be able to sell calls.
Yeah, I mean, we can't complain with the gain here, but crude oil at one point this morning was up 4%. It has pulled back, and we see the same as taking place with Halliburton right now. Crude oil up 2.4%. So pulling back from the highs that we saw earlier.
Yeah. IWM, Mark, talk about selling calls. We're having fun with IWM here.
Yeah, IWM just up big out of the gate this morning, and we sold calls at the 200 strike that we rolled for 2 weeks. Well, we rolled twice. And then on Friday, we rolled those out to this Friday to get some nice premium there. But we both had some calls expiring on Friday, this past Friday, that we chose not to roll. So you had the 205s expiring worthless. I had the 20250s expiring worthless. And the reason why was we were hoping for this type of move. I didn't expect to jump up to 210, but I'll take it. And we were both able to sell the 210 calls this morning, and we got 240 on those 210s.
Yeah. So right now our cost basis is at 199.75. Our break even currently at 193.98, so 194, let's say. And we decided to sell calls half and half, as you said, half of our position, the 200 calls that are expiring this Friday, the other half position this morning, the 210 calls. Well, this will be if we are closing above 210 by Friday, we'll get called away in both positions. And this will be a very nice gain because this will be a $10 gain per share. If it stays between 200 and 210, these expire worthless, and we might be able to do the same thing next week. And at this point, highly unlikely that it drops below 200. But hey, anything is possible. If it does, we will be able to collect more premium. Otherwise, we might get called away on half of our position. But yeah, this is
Sure.
just a beautiful trade working out nicely.
Yeah, can't complain.
Coles this morning. Coles having a great day today. I mean, at least when I looked earlier. And okay, it's pulling back a little bit. And by pulling back, I mean, it's still up 12.5% for the day. I think it was up as much as 14 or 15%. So definitely going back towards the upper range of this level here. Today we were trading as high as 787. So let's see if we can crack above the 8, and then the next level will be 950, then the next 1250. So let's see. I mean, right now I'm taking a 12% gain in this position. No complaints here at all.
Yeah, there you go.
Merck. I mean, Merck is the huge surprise of the day. We just talked about it. If you look at a 5 minute chart and we look at pre and post market data, we see that this morning, with the rumors, Merck was trading as low as 73.50 in overnight trading, looking like it would open 3 or 4% lower. And now it is up. Where are we right now? Up 4.6% for the day. Huge move in the open, and right now hanging out there at
Yeah,
session
I was a
highs.
little worried because this is not a trade that I'm in. I don't own shares of Merck, but with that executive order, I was a little concerned and just hoping that you and other traders weren't getting too roughed up this morning. But I would not have guessed that Merck would be looking at its best gain in a couple of weeks.
At least, yeah. I mean, again, buy the rumor, sell the facts, or in this case, sell the rumor, buy the facts. And then we also have our buddy UPS. And UPS, oh wow, what do we have today around the unchanged mark? I would have expected a little bit more excitement here in UPS. Oh no, we are
Actually,
5%. Sorry. Yeah. Sorry. I was just looking
yeah,
at a
yeah.
5 minute chart. Okay. That makes much more sense. This morning, as high as 102 right now, trading at 173. Yeah, we'll see what happens here. Currently, our my break even at 116.67. Here's the cost basis, but UPS, it seems that the world will start shipping goods again.
That would help.
Absolutely. All right. So this is what's happening with our positions. Oh, MU. We got to talk about MU. That is a trade that you took because you are not in Coles and Merck. So this is why you decided to take the MU trade and walk us through this trade.
Yeah, so on one hand, it's a little unfortunate that I wasn't able to capitalize on today's move. On the other hand, I have been able to get a ton of premium here. So last week, I was able to roll my 79 calls expiring this last Friday out to this Friday, and I got a buck 20, which was 59% annualized based on the premium that we have collected for a week. And I've rolled this a few times. I sold calls a bunch of times on this. So my cost basis is 73.75, and even getting called away at 79, that's a nice increase on the stock in addition to all the premium I've gotten on the call side. So I would guess that come Friday I get called away and there isn't enough premium to, at least for my plan and based on my rules, to be able to roll. But you never know. I have those 79s on Friday, and we'll just have to wait and see.
Now, overall, that's a great trade because even if you get called away, you make $6.25 per share, as you said, in addition to all of the premium that you have collected. So that just worked out beautifully.
I need to correct the math though. It'd be 525, but who's give or take a buck.
Yeah. I just wanted to I wanted to give you more money. But yeah. I
I
mean,
appreciate it.
I'm drugged up on steroids. So what do you expect? All right, so let's see if the markets can hold up here at session highs, if they're rallying or if they're pulling back here in a moment. And I mean, back to on by popular demand or popular request, our dad jokes. What do you got for us today?
All right, Marcus. So, do you know how many total miles there are in a triathlon?
Uh, no,
It's
like
actually 31.07. Do you know why it isn't 3.14? Because then it would be a python.
okay.
Sorry, a little math joke.
All
A little math humor.
right. Math talk this morning.
No hurt
Okay.
nobody.
All right. All right. Hey, why don't eggs tell jokes?
No idea.
They might crack up.
Yeah. Okay. Okay.
Okay. Well, you guys let us know which joke you like better. And here we are. We are still trading at session highs. I mean, Mark, I don't know about you. I expect that we are moving lower a little bit because this is a lot of excitement. I mean, a 2.5% move. I mean, this morning we almost had a 3% move. That is huge. And yes, the news are huge. And there's still a lot going on with the rest of the world, right? And the trade war against the rest of the world. China, of course, the major US trade partner here. So this is why it's great news. But I expect the markets to pull back a little bit. I mean, obviously not all the way down here, but since we didn't rally after the opening, I think that this rally will fizzle out a little bit. What do you think?
I agree, and I also think that what we've seen so far is pretty strong, right? It just shows that investors were waiting for this, hoping for this, and are liking this news, because normally you get a little more pressure to fill the gap after such a big jump. Yes, we pulled back a little bit from those highs, and yes, we might see a little bit of a dip during the rest of the session, but so far, traders loving this.
Yeah. So and it's in all three indices, the major indices. So we have the Nasdaq still trading at the highs. We have the Dow still trading there. The Russell pulling back a little bit more. And again, for us, good. We sold the 210 calls right at the open. So we might be able to actually close this at 80% of max profits today or tomorrow. And then on the next pop, do this again.
That would be the plan.
All right. Well, that's it for today. Hope that you enjoyed it. If you do, there's probably a way to give us a like. And if you feel that this is information beneficial for others, do us a favor and share it with others. And then also, I've released a new video and I'm going to link to the video somewhere here right now. Enjoy this. And then with that said, have a great rest of your day.
Happy trading, everybody.